Welcome to Dinar Community, your premier source for currency news and global financial insights. Today's coverage isn't just another financial update, it may well be a defining moment that future economists and historians will cite as a major turning point. For years, discussions about a potential revaluation of the Iraqi dinar sparked controversy. Some dismissed it as little more than an online myth, while others viewed it as an inevitable outcome based on Iraq's untapped potential, vast energy reserves, and strategic global position. Now, what was once speculative theory has become official policy. The Central Bank of Iraq (CBI) has enacted a major revaluation of the Iraqi dinar, a move that's creating ripples across global currency markets, trade networks, and investment platforms. This isn't merely a rate adjustment, it's a bold redefinition of Iraq's economic standing. Until now, a 2,500 Iraqi dinars note was worth less than $1 USD, trading close to 99 cents in most open market scenarios. With this dramatic policy change, the same note now fetches approximately $17 USD, an astronomical surge exceeding 1,800%. This isn't the result of gradual appreciation, it's a deliberate recalibration initiated by Iraq's monetary authorities. Global impact and market repercussions. The implications of this shift extend well beyond Iraq's borders. Investors, traders, and governments are now reassessing their positions. Currency revaluations of this scale are rare and often send shockwaves through the financial world. This move places Iraq firmly in the spotlight as an emerging market capable of commanding global economic attention. Currency revaluation refers to a purposeful increase in a nation's currency value by its central bank, not market speculation or natural price fluctuation. Such moves are usually made to reflect stronger economic fundamentals, attract foreign capital, and bring currency values closer to real-world purchasing power. A move years in the making. For years, Iraq's currency had been artificially pegged at a rate of about 0.0396 per dinar, a figure critics argued didn't match Iraq's natural resource wealth, especially its ranking among the top 5 oil-rich nations. High oil revenues, combined with a rising export capacity, allowed Iraq to rebuild financial reserves and position itself for this sweeping monetary shift. Crucially, this revaluation didn't happen in a vacuum. Global institutions like the IMF, World Bank, and WTO have played advisory roles, helping Iraq implement reforms in banking, fiscal transparency, and regulatory oversight. These initiatives laid the groundwork for an economy ready to step onto the global financial stage with greater confidence. Domestically, reforms under Prime Minister Mohammed Shia al-Sudani have emphasized accountability and good governance. All of these factors created the conditions necessary for a successful revaluation. What this means for investors. For those who have held dinars in anticipation of such a development, the payoff is significant. 1 million IQD, once valued under $400 USD, could now convert to over $7,600, depending on the exchange channel. These types of gains are virtually unheard of in mainstream investment markets. However, these rewards come with new responsibilities. Foreign exchange markets are volatile, especially after sudden shifts. Investors must confirm rates through licensed financial institutions and beware of misinformation or scams. Additionally, tax implications, especially capital gains taxes, could heavily affect net profits in countries like the United States. Consulting a professional tax advisor is essential. Next steps for currency holders. Now more than ever, it's vital to confirm the new exchange rates with authorized institutions. Avoid unofficial or unlicensed currency exchangers. Keep detailed records for tax and compliance purposes. Monitor official guidance from Iraq's central bank, IMF, and relevant regulators. Broader economic transformation. This isn't just about profit, it's about potential transformation. With a stronger currency and bolstered investor confidence, Iraq is poised to accelerate financial modernization. Technologies like digital banking, mobile wallets, and even blockchain-based services could take hold more quickly, helping bridge the gap between urban centers and rural communities. A reformed, transparent financial system may reduce corruption, increase public trust, and attract serious international investment. This new confidence in Iraq's economy can support stable borrowing, improved public services, and infrastructure projects, particularly those that benefit historically underserved populations. A strengthened dinar could also trigger job growth across key industries such as oil, construction, tech, and agriculture. As employment rises, so too will consumer spending and government revenue, creating a sustainable cycle of development. Challenges ahead. Despite the optimism, significant hurdles remain. Currency revaluations often lead to market turbulence and speculative behavior. The CBI must manage liquidity wisely and communicate clearly to avoid confidence erosion. Additionally, while a stronger dinar reduces the cost of imports, it may hurt Iraq's export competitiveness. Exporters may need to focus on value-added goods rather than volume. Inflation control will also be key, as increased consumer spending could overheat the economy if not managed properly. A carefully balanced approach, combining sound monetary policy, clear communication, and disciplined fiscal strategy, is vital to ensuring long-term success. International implications and market reactions. Global markets are already adjusting. Banks are recalibrating currency risk, investors are rebalancing portfolios, and governments are reevaluating trade and diplomatic strategies. Iraq, once primarily associated with post-conflict rebuilding, is now being watched as a serious economic actor. This revaluation could trigger updates to trade agreements, changes in supply chain contracts, and reviews of currency exposure risks. Corporations operating in or with Iraq will need to realign their strategies accordingly. Could this inspire other nations? Iraq's approach is now under scrutiny by global policymakers. Could this be a blueprint for other resource-rich but financially unstable nations? Some see it as a masterstroke, a calculated assertion of economic independence. Others warn that without deep-rooted institutional strength, the move could be fleeting. Think tanks, academic institutions, and financial analysts are studying Iraq's playbook carefully. The success or failure of this move may set a precedent for how emerging economies reshape their financial futures. The road ahead. Whether the dinar's value continues to rise or stabilizes, what comes next depends largely on Iraq's continued commitment to reform. Smart monetary policy, transparent governance, and responsible public spending will determine whether this revaluation marks the start of a lasting economic revival or a temporary surge. For Iraq, the dinar is no longer just a currency, it's a symbol of ambition, resilience, and potential. The world is watching. Whether this historic shift becomes a model for transformation or a cautionary tale will be shaped by decisions made today and in the years to come. Join the conversation. What are your thoughts on Iraq's bold move? Do you believe the IQD will maintain its new strength or adjust over time? Could this strategy inspire reform across other emerging economies? We want to hear from you. Share your insights in the comments below. Like, share, and subscribe to Dinar Community for expert analysis, timely updates, and exclusive interviews. Tap the notification bell so you never miss a headline that could impact your financial future. Stay informed, stay ready, stay ahead. Like and subscribe for more videos.